100 to 500, I will probably just take 100 euro out and do it like that.
Okay, so you would initially have a big withdrawal, make yourself risk free, and then you would try again, and then the next time you would only take a little bit of profit out, leave more in, and try to make more money per trade with a larger balance the next time.
Exactly.
Okay, that's what I recommend to most people. That's a really good approach. You want to get yourself risk free as quick as possible. So in the previous call that I had with Kevin, he's now in that position where he turned, I think it was 100, and he got it to like he was up 1200%. He withdrew 500 euros out, and then he's now starting with obviously 500 euros on his second account as opposed to 100 euros on the first one. So he's at a slightly higher balance, but he's risk free. Even if he blows that account, he's still massively in profit, and it's a really good way to do it. I totally understand when people have small accounts that they don't want to risk small amounts per trade, because nobody wants to trade for a whole year, and you might have made 100% at the end of a year, but then you've only made $100, which is not worth anyone's time, is it?
Yeah,
So
exactly.
the alternate is that you do stuff like this, where you know you are over risking on a small account, but the risk is controlled because the account balance is so small you're happy to lose it. And also, if you do manage to hit your goal, which as you said, maybe 5x, and then withdraw that profit, you're then in a risk-free scenario. You actually can't lose money from that point. So it's a really good method of doing it.
Yeah.
Let's just move on to the next question then. So, how much do you actually risk per trade?
So I'm trading right now on a 100 euro account, and per zone I risk 0.10 lots on Dow Jones, which is the smallest lot.
Yeah.
So it's the smallest risk that I could potentially run.
Okay, so you're actually in at the lowest risk possible on the Dow. Do you do it differently on Forex or on gold?
No, same. Also 0.01.
Okay, so on all instruments, then you're on the minimum possible lot size.
Yeah, even for my 1000 euro account that I started, I was not trading a 0.10 lot size on gold. I was trading a 0.01. And when I turned the 1000 euro into 2000, I increased the lot size to 0.02.
Okay, so I mean, even on even in a very short period of what is only 2 to 3 months, you're up like 180% by risking literally the lowest amount the broker will allow you to risk. So that really shows the power of this strategy. That on the minimum possible risk, you're up 180% in a couple of months. So you
Yeah.
can really see the power of the strategy. It also kind of explains why Kevin was at 1200% gain in like I think it was 35 days, because he was actually doing 10% of his initial balance when he started, which is way higher than you're doing. But you can kind of see the differences between the two. I'm not saying that any approach is better than the other. I just find it interesting that you've gone a different route and yet still had amazing results with it.
hmm
Okay, next question then. So, what times do you typically trade, and are there any times that you avoid?
All right, so let me just. Is my like trading sessions, is it clear? Like the different colors, or is it not?
I can see a blue, a kind of purple. Yeah, that's better now. Yeah,
Let me just think like this.
yeah. I could see that there was three colours in there, but it may not be coming through on the recording.
Yeah. All right, so what you can see right here is where I start trading.
Yeah.
So let's just stick to Dow Jones right now because that is my favorite pair and what I will continue trading in the future. So 7:30 I start trading it. And what you can see for London session on Dow Jones is that it's not volatile at all. Like there's a very small movement.
Yeah.
Sometimes you get one trade, sometimes you get two trades. It's not too much, and that's fine. But around that's just what I noticed myself around 1 p.m. CET, by the way. There's more volatility, and when the US markets open, so that's 3:30, there's a lot of volatility.
Yeah.
So I trade from 7:30 until around 5 CET, but for the first few hours, so what you can see right here, I don't actively trade. I place my pending orders on the levels. I just wait. If I hear a sound on my VPS, so either a ka-ching sound or that it added another trade, and that's pretty much it. And if I just quickly go here, switch to the 1 minute time frame. After 3:30, I trade more actively. So I just watch the chart a little bit more. And if there's any news event planned, and I think this is very, very important, you just have to try to get out of your trade before it happens. So let's just say a news event is scheduled for half past three, so right here,
Yeah.
just close the trade. I don't think the risk is worth it. Um, it can go your way, so let's just say you're in two trades, it can spike up and take profit, but it can also go the other way and just move down for like 7 or 10 zones.
Yeah, so it can be quite explosive when New York opens. Right, so a couple of things that I just want to touch on there that you've mentioned. So the little ka-ching sound that you talked about, if people don't know what that is, you're actually using Dash Plus. Now, Dash Plus is one of my EAs, and it's a trade manager tool, so it allows you to manage your trades much easier than doing it manually, doesn't it?
Yeah, yeah.
And
I don't. I think if I didn't have DP, it will take me maybe 5 times more.
yeah,
Like,
and certainly trading both ways. I have traded. I mean, I traded this manually for about 8 years before I made DP, and I did do it both ways on occasion. But it's incredibly hard to manage, and it's so easy to make a mistake. It's so
yeah,
easy to accidentally close the wrong one. You can mess it up. Whereas DP takes all of that away, doesn't it? It's literally set and forget. You turn the grid on, you give it your settings, you enter the trade, and it does everything for you. So you don't think it would be possible to go both ways without it?
no, definitely not. I will. If you want to trade this, I think you need DP because otherwise you will just, as you're saying, spend too much time. But also, it's very easy to make a mistake.
Yeah. I'd agree with that. I mean, in terms of trading it just one way and trading a normal strategy, I did it for years, so you can certainly do that. If you're going to go both ways, like you're doing, which a lot of people seem to be doing, you definitely need DP because you will just mess it up. And the loss that you will take when you mess it up, you will just wish you'd spent that money on DP instead. You know, that's the scenario, I think. Okay, you have touched on cutting. We'll come back to that. That's one of the next questions. So we'll come back to that. What's your max loss then, or an equity stop? Do you have either of those? Do you have like if it reaches X dollars or in drawdown, or if it reaches X percentage? And is that across all instruments that you're trading or per instrument? Do you have any kind of equity stop or max loss?
So, to answer that for Dow Jones, I do not, because simply I have not had a single day where it went into a very big drawdown.
In three
It's always
months?
better to have a plan beforehand, regarding where you want to stop out. But so far it has not happened. And since I'm cutting trades before any major news event, I think it's very unlikely to happen. And if it happens, I just blow my account. And that is the risk that I have with trading a 100 euro account, pretty high risk. So yeah, that's basically the answer for Dow Jones.
Right. Okay. So that's quite interesting. So first of all, we've seen from your trade history that you've been doing this for about 3 months. In those
Mhm.
3 months, you have not had a big drawdown, even on the Dow Jones, which moves a lot. And what's interesting is that you've been cutting trades. Now, my next question is, do you cut trades if you're wrong, and where do you cut them? Now, you've already kind of touched on this, so let's just go back to that a little bit. You've already said that before New York Open or before a news event, you are willing to cut trades and you do cut trades. So, what would that look like? Is there an amount of drawdown where you would think, oh, I'm in too much drawdown, I'm not going to cut that, I'm going to hope it reverses and gets me out? Or do you literally, are you quite rigid with it? Do you just say, no, there's news due in 10 minutes or whatever it might be, I am cutting all trades now? How do you actually do it?
Okay, so let me just go to gold for answering that question. Because I had to cut a trade on Friday, and I will explain why I cut it.
Okay.
So this is, by the way, what I mean with bad weeks for gold. As you can see right here on every single like blue level, it just went straight up or down with pretty much no reversal.
Yeah,
So
it's
there
been
was
quite explosive, hasn't it? It's literally been very directional. Looking at each of those days, I can see it's had a very big push in one direction.
exactly. So on Friday, I was in buy positions and I was just stacking up some buy positions right here.
Yeah.
And at the end of the day, I think it was around like 5 or 6, so around this level. Let me just remove the drawing. So around here, it was just falling and falling. And I was minus 100 euro on my 500 euro account. And I was like,
Yeah.
this is not worth it to hold. I have no idea where it's going to go to. it broke this level, like a major level right here, which it just broke through, it went up, and then it was continuing to go down. So I just cut the trade. There's no fixed rule for me. There's no like, oh, if it's minus 50 euro, for example, I'll cut the trade. Um, but that's the reason, like that was one of the reasons why I did cut a trade. And for Dow Jones, my plan is to not cut the trade. My risk is just to either make 5x or 10x,
Yeah.
depends what I aim for, or blow the account.
Right. So to clarify then, when you're cutting trades like you did on gold, it's not done on any particular percentage of drawdown or any amount of money. It's done on an area of the chart where you kind of think, okay, that's a key level. That should not be breaking. And if that does, then you think, okay, there's no point holding this trade anymore. My analysis was wrong. It's not going the direction I thought it was going in. I will take this loss. My account will lose money, but it will survive and I will make it back another day. So that's your approach with that. Now, with the Dow, it sounds like you're willing to give it more room to breathe, but I assume there is the same scenario. There is a point on the chart where price should not reach, and if it reaches that, you would cut. Is that correct?
Yeah, that is true. And that is also the pro about buying and selling at the same time. Um, or just having no bias. Let's just say I was just selling here, on every single level. I was just selling, but I was also buying. And let's just say price just keeps going down.
So
Like
just to clarify then, for people who aren't understanding what it is that you're saying there, is you're partially hedged. So because you're buying and selling at the same time, even though one of your trades is going into drawdown, you also have a profitable trade that is helping to pay for the drawdown.
That's exactly what I mean.
Okay.
So at this point, let's just say we didn't have any pullbacks right here, okay? So let's
Yeah.
just say it went straight down. I was making money on the sales as well. So let's just say I make like 20 euro and my drawdown at this point is 70 euro or something like that. I can cut it with a 50 euro loss instead of cutting it with a 70 euro loss if I was just going for longs at this point.
Yeah.
That is also why I like buying and selling at the same time.
Just let me stop you there. And just one thing that I'll point out is, so in that scenario then, if you could just draw an arrow from top to bottom in a straight line for me.
Let's just see where the arrow is.
So basically, with what
it.
Quentin just said, if price is falling all the way down the zone like that, that's the worst coloured arrow I've ever seen.
Let me just make that clear.
Just make it any colour that's visible. That'll be helpful.
Here you go.
Thank you. Okay, so if price is just falling in a straight line like that, if it's just ploughing through, in this scenario, trading both ways, you would be banking the sell trades at each 50-point level. So let's say you're making, for example, $10 per zone. So you're banking $10, $10, $10, $10 all the way down. But the open buy trade, especially if you are adding at every 50 points, that's now growing. The drawdown is growing bigger exponentially. So you have linear gains on the sell side, which is winning, but exponential drawdown. Now, exponential means that it's growing at an ever increasing rate. So to some degree, the winning trades are helping to pay for the losing trades, but the drawdown will be growing at a faster rate. And the longer you let that continue, the bigger that will get, and eventually the account will go. The only way to have it hedged would be to not bank the sell trades and to keep adding. And then you would actually have exponential in both directions. Now, this is quite complicated to explain. You will see for yourselves if you try this. But what Quentin is saying is, if it reaches the point where he's not confident in the trade anymore, he will use some of the banked profits from the sell trades in this example, where he's been banking, let's say, €10 or $10 per zone, to pay for the open losses on the buy trades, so that when he cuts them, the loss is smaller. So
Yeah, and I think
you've done
it's
it in quite a simple way, haven't you? You're just looking at, okay, here's what I've banked so far on this move from the profitable trades. Here's my drawdown on the losing trades. I'm happy to take that loss. I'm gonna offset it using the profits I've made.
exactly, and I think it's also very important to take losses as well. Don't always try to have a winning day. If price is just going fully against you and you're not feeling it, just cut it. There's a new day tomorrow. That is also what I do. I just try to get out at the end of this like area, so this session. If it's after 5, I just try to get out. If it just keeps going against me, I just cut my trade. I probably will have made a lot of money already. So if I just close it right here at 15 euro loss, something like that, it's fine.
I'm very glad you said that, and that's probably the key point in this whole video. So bearing in mind we're about half an hour in, which